Good morning, traders. It's 8:02 a.m. Chicago time on Tuesday, the 28th of March, 2023. Thanks for joining me. This is episode number 2438. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Good morning. Good morning. Let's just get into it. We're going to look at the Convergent Trading pre-market summary sheet here. And it's really a quiet session, really quiet this morning. Not what I'd like to see. Not very exciting. Not that I'm here to be excited, but it just tells me that things are in equilibrium for now. Thank you guys for the sound check. We had Walgreens this morning, and we have Micron after the close, along with Lululemon. And this morning, we also got the, where is it? Interesting. I thought we were getting the zoo this morning. Let's see. No, we got the zoo last week. Okay, so nothing really significant this morning, it looks like. U.S. Treasury's Liang says U.S. government will use tools to prevent banking contagion if warranted, and U.S. financial system significantly stronger now due to stronger capital and liquidity requirements. I don't know when that happened. U.S. House Speaker McCarthy does not think there needs to be a blanket insurance on all bank deposits. Of course, he doesn't. Disney plans 7,000 job cuts. Alibaba to restructure into 6 main business divisions. CFTC sues Binance for illegally serving U.S. customers. Today on the calendar, really, the overnight calendar shows that business confidence numbers came out of France and Italy. Both beat pretty well. I'm not seeing anything really significant. We had wholesale inventories came in at plus 0.2. The forecast was for negative 0.2. Case-Shiller, which just came out, comes in at 2.5, expected at 2.5. And for year-on-year and then month-on-month, home prices dropped by negative 0.6, which is actually less than the forecast and less than the prior. We do have Lagarde here at 9:15 Eastern, and then ECB, the CB consumer confidence. I think the times on this chart are central. They're incorrect. But consumer confidence at 10, Fed's bar testimony at 10, API crude oil stock change at 4:30 after the close today, and then Korean consumer confidence this evening, and the CPI indicator out of Australia this evening as well at 8:30 Eastern, not 7:30. So that's where we stand. Looking at the S&P, this is going to be right quick. The S&P is quite balanced with relatively low volume. 150,000. The expectation for volume is 220 to 280,000. That's what we're generally looking for. This is quite low by recent standards. The inventory is balanced overnight. We're trading right around, we're within a rotation of settlement. Notice that settlement's very close to the prior day's settlement. It's a 4,007. The prior was like 4,001 and change. And the range is 26.75 points, which is quite low. We expect around 31 to 35 points. What I'm saying, what I keep saying here and repeating is that just, manage your expectations today. I really don't see us going nuts. Yesterday was a very tough session. In my opinion, I think a lot of false positives in terms of setups that didn't go anywhere. I mean, holding the short was a grind. Holding the long was a grind. Sitting on your hands was a grind. It was all a grind. I think someone in the Convergent chat room said something like the best what was it? I forget what it was. It was quite comical. It was like the best position I took was my seat in the lounge chair out in the backyard or something like that. So I agree with that sentiment. Here's what was expected yesterday. Yesterday I was looking for the market to drop to 4,001 and was looking for a bounce from there into back towards the 4040. It's what we got. We got responsive selling down into the 4,000 yesterday. We hit the 4,000 and a quarter. We closed the gap. Again, pretty tough hold. We did open in a gap up in an open auction out of range, and just kind of ground ourselves down very, very slowly. So yesterday, the main plan was spot on, but trading it was not. The difference between the reality of things and the theory of things, right? So here's what we got yesterday. We had the prior session high right over here. We opened right up here, very, very choppy. We had a very clear opening swing that broke to the upside, and then it walked right back to the close, and it was just chop, 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 and that's for the first hour. And then we finally broke down, put in the initial balance, pulled back to mid here through the full session VWAP, pulled back to mid, and then ultimately took out the IB low. And notice that balance had shifted lower. And the overnight session balance was up here. It shifted lower and it stayed down to the low side. So it was just, look at the number of bars that are overlapping as it moves lower, which means that if you're in a trade that is in the middle of some of those bars, you basically saw the market move away 6 points or so, come back to break even, go against you 2 points, move away 7 or 8 points, come back 6 points or so, back to your break-even price, linger there for a bit, move away, and then come all the way back, and it's below your short price by a point or two, then move away, and then come back to your short price, but a little bit lower by 3 or 4 points, and that's what you had to sit through yesterday. And we're talking, good hour of just doing that. There was really no confirmation needed to be in a thinner product. I think yesterday, the NASDAQ was more reasonable than both the Russell and the ES. I did not look at the Dow. And then we ultimately ended up breaking back above the sandwich here, the day session level sandwich, the IB low, VWAP, VWAP full session on RTH, and an RTH and full session mid, all kind of sat together here. They got poked through, higher low, pushes, pulls back from the other side, and then falls back through. I got to tell you, it would have been easy to lose a lot of money yesterday, and if you did, you got to go check your risk management plan and your daily loss limits. You should have daily loss limits for days like yesterday. Now, coming into today, really, we've opened where we've closed, basically. We've opened basically where we closed. We settled a little bit earlier, down below, settlement down here. We opened, we tested higher, and we came back into settlement, and now we're just below settlement. The key thing here is yesterday did close the gap zone. Yesterday did poke into Friday's upper portion of the range, and today looks like it's breaking or is trading at the prior low, which may end the one-time framing up temporarily and put us into neutral mode. Let's take a look at the bigger picture here. Here we are. This is Friday. Remember, very boxy profile on Friday. Very tough to read where value is, and so there's no value. And if we push in here, it's really hard to use profiling to determine where potential pause points or hold points are. We have to rely on price action in this situation. So I'm looking for it to push back to 39.90, which we talked about yesterday, 39.90. And once it gives that up, 70 below. This is 90, not 96. 70 below, and then the target is likely to be the point of control at 39.55. 39.55. Now, whether it does that or not, it's hard to tell, but we are, yesterday's range was highly compressed compared to probably the 10 or 12 sessions before it. And today's session is likely to be the same. It's likely to be also highly compressed. The big number of the week is on Friday, the PCE number. And until then, we have nothing feeding this. It is spring break here in the U.S. Things are slow. Volume is light. A lot of people are on holiday. And that's what we've got. So please manage and temper expectations. That's all I can offer you in terms of helpful advice, or what I think is helpful advice. Taking a look at the composite, here we are. We attempted to push through and break this ledge and start gunning for that FOMC high, so 48, and then looking for it to push to the 70s, and it was unable to do that. It opened higher, then it closed, and we are right in the middle of this low composite, low volume zone. As soon as we take that out, as soon as we push through the 39.90, which will be like the kind of the real measuring point, the real support I expect for this morning. If we break through the 39.90 and pull back, then you're targeting the 39.70 beneath, as I talked about, and then now we are stuck in this lower distribution. The market has nothing new to price in. So there's no real edge here in either direction. It's very quiet. Here's the thing. If the market is quiet, traditionally, it generally means that it's setting up to accumulate. It's setting up to rally. Wow, is this thing this late? It looks so far behind. It's setting up to rally. Markets generally aren't quiet ahead of a big move down. There's usually a lot of noise before the market responds. And so to me, I'm still looking for this thing to squeeze into 40.50 and then to push the 40.70 area, the FOMC high up here, 74 or so, and then to start getting back to 4,100, most likely back to 41.60. If you recall, that was the area that I was looking for before, 41.60. This is what it's shaping to be. But that's not information that is actionable currently. There's nothing here that tells us, the market has an upward skew. Right now, the market skew is neutral. It is balanced. Just remember that as you're trading. So let's take a look at the NASDAQ for a minute. The NASDAQ, same story, same thing. NASDAQ just compressing, consolidating, higher highs, higher lows, lower highs, lower lows the next day, the day after that, a lower low and a higher high maybe the day after that, lower high and a higher low for an inside day. And until this thing actually breaks, which again, I believe it will be to the upside, a lot has been priced in, a lot. These banks are cheap now. A lot of analysts are saying, go get yourself some banks, as they are really trading cheap. In my mind, as soon as the market gets over whatever's holding it up and whatever it's waiting for now, it's likely to resolve to the upside. So we'll see. So what we've done is we had the FOMC, and we have flagged. If the FOMC was so hawkish and the news is so terrible, we wouldn't be hanging out here On an intraday time frame, this would be considered a high flag and a very likely break higher. On a day-to-day time frame, it's just a higher fractal of the intraday. I expect the same. That's all I have. Again, I'm speculating on a much higher time frame than I trade in. For now, I'm just looking for very simple setups, actually, and they are day-generated levels, and looking for which day-generated levels are being respected or leaned on by the market. That tells me which time frame is in control. I expect the day time frame to be in control today. The second piece is impulses. Look for pullbacks and continuations. Look for the quality of the pullback and then trade the continuations. In general, this means very short term. And then the other piece, the other setups that I'm looking at these days and working with are order flow setups. This is when the market has pushed. A lot of people have piled in, and it is trying to continue, and it's unable. And you get the quick flip and push. And again, these are mostly scalp-like trades rather than structured, substantial trades. It's mostly scalping territory right now. Okay, sorry, I'm not the bearer of better news, but that's where we are. I want to remind you that I'm going to be on a show tomorrow, Wednesday at 12 o'clock Eastern, with Anthony Crudelli, Bob Elliott, and Tavi Costa, to talk about what these conditions are. The giveaway is for two 10th generation iPads. It'll be a random entry. To enter, go to edgeclear.com/deli, edgeclear.com/deli, and enter your name in there. And then the show will start at 12 p.m. Again, the giveaway ends tomorrow at 11 a.m. The show starts at 12 p.m. Okay? Good luck, and I'll catch you tomorrow morning. Take care.
Reuters reporting U.S. unveils new 13-count indictment against